real estate spring market.
Real estate spring market. What do you want to talk about in the spring market? Being a new buyer, first time buyer, or upgrading from your first house to your second house? What do you think that people need to know about the spring market and being pre approved with CrossCountry Mortgage?
For me as a spring market, it always is like this optimistic time where you're going to get a ton of business, ton of calls. And the biggest thing I think you can take is just being prepared to not miss that house that you love, because a lot of people wait in this, in our market, because there's such seasonality in the winter, and a lot of people hold off to listing their homes in the spring when they feel they're going to get top dollar. So that means a lot of the best homes are really, people work on their houses, make sure everything's in place and all the I's are dotted, T's are crossed, painting, everything is up to date so they can get the best dollar. That means it's going to be super competitive. So we want to make sure our clients win, because it not only saves me time and you time and running people around, but it saves them time and headache and heartache when they lose the house they love. So we want to make sure we're putting our people in a position to win, and we want to make sure that we're doing everything up front, whether it is, executing on their credit, so they're getting the best rates on rescoring options. We're giving them buy before they can sell options, right? So they, bridge it on. There's a couple other products we have to make people as competitive as possible. What do you see with the spring market?
Spring market, same thing. It's just being ready. I think it's making sure my buyers are talking to you. They are getting pre-approved. There's not many houses available right now because of how cold and icy it's been. But turn, March 1st, April 1st, there's going to be a boom of houses. So if we find something on Saturday afternoon and offers are due Monday, we got to have that pre-approval already ready to go by Monday. So, talking to you in advance, having that ready to go. Knowing what you're looking for, knowing the areas that you want to be in, I think that's important. And then trying to have that conversation with your loan officer about how you can stand out too against other offers, because you might find that house you love, but there might be 10 other people that love it too. So how can we make our buyer stand out a little bit?
Right? How can we differentiate? Right? Not be contingent. Figure out how we can not be. In the world of financing, cash is king, and then it's conventional VA, FHA, you know what I mean? And then without if there's two similar offers, the non-contingent offer is going to win over the contingent offer. And, a lot of times it's, asking the other side too, like what's important to win the offer, like an extended closing date, a shorter closing date, like try to figure out exactly where we are. So the earlier we can jump on in my world, the quicker we are, and I've had people who feel that getting their credit pulled or things like this is like a last second decision. And we know somebody's going to buy, and it happens often. And it goes from being, where if we had time, we could have set it up and rescored them to get to conventional. Whereas there wasn't time, we had to go FHA.
Yeah, I totally see that all the time. People wait until they find the house that they want before we get our updated pre-approval letter. But, if you're sitting around a score that you're not happy with, or maybe it's a score you didn't know that you had, maybe you thought you were scored higher than you were, when it's time to go get that conventional approval, and you might end up having to go FHA or another way, you're going to be lower in the stack on terms of offers, whereas if we reached out to Mike, reached out to me, had that conversation, and we're open and honest with each other from the start about where we want to be, then when we find that house, yeah, you're absolutely going to be able to win, because we'll be able to kind of iron out all those issues or details up front rather than the morning of our offer being due.
I always think of it's like a doctor's appointment. It's like you are you don't want to go to the doctors before you have that heart attack or stroke, right? Like people are like, going to hold it off. Like they know things aren't going good.
It's a good way.
It's like credit. It's like, I don't want to get it pulled, right? But it's like, I need this house. I need to do it right now. Like the earlier you can, absorb what's going on and, take your medicine and figure out how to get things on the right track, the better you're going to be.
You're not wrong about that. It's like a domino effect almost.
And here's the other thing. The credit scores that you get for free somewhere are not your real, mortgage credit scores, right? They're done with a different calculation. So a lot of the time the numbers that consumers see, not from us, is actually a higher number, like that is driving them to get more credit.
Mm-hmm.
So it's not the accurate number that you see.
So what CrossCountry Mortgage might tell you with your credit score versus what your credit card company, who's trying to get you to have a higher credit line, are going to be telling you two different things.
Correct.
So where do you pull credit from then?
We put to a tri-merge pull, right? And in the option, there's a few different ways to go about it, but You can do a soft pull initially for a lot of the products, and we can get, a soft pull where it doesn't really ding you as hard. And then there's a hard credit pull, right? But they're pulling from 3 repositories: Experian, Equifax, and TransUnion. And then for most products, it changes with different products. But the majority of the products they take the middle score. So they throw out the high score and the low score, and they use the middle score to determine what credit score we're going with.
Gotcha. Okay. So, and that oftentimes can be lower than what people expect because they're
Oh,
looking on their apps of their credit card as they pay each month. They're thinking about getting that new car. They see that they're approved for an auto loan because they have, such great credit. And then they turn around and talk to you.
and I had to break the news, and it does me no good at all for lower credit scores. It makes their, obviously the rates higher. Sometimes the mortgage insurance could be higher. It just makes it a little more difficult. So anything we can do through like a rapid rescore program or anything to get their credit up. And a lot of times you'll have people, who do the right thing and come out initially a few months before they're looking to buy and get their credit run, and then, pay down revolving credit, do some things that we can do to help improve their chances and improve their program that they're getting. They'll do that, and there's a lot of reward in that.
Absolutely, yeah, because it might be just a couple tweaks and changes to their credit or their history that you guys help them make, and that could make their score go up, drastically, which will change them from one style of a loan to another.
Correct. And that's everything. I mean, when you're getting, 20 offers on a house, there's marginal differences. There are marginal differences that separates them. It is, has this person been fully underwritten up front? Is it a cash offer? Is it a cash guarantee offer? Is it a closing guarantee? There's different things that we can do to separate. There's different levels of credit approvals that we can do the earlier we get on it. Sure, the dollar amount matters a lot, and that's usually probably the number one thing, but there's other factors in helping win deals.
Absolutely. I mean, another bank can go ahead and approve a buyer for the same amount, but then having that faith that CrossCountry went through and did their due diligence, maybe they are fully written up front. You're able to give a $5,000 or $10,000 guarantee on closing for this buyer. That's huge compared to, maybe the 15 other offers that are just doing the bare minimum.
Right. And then just, having a real estate agent like yourself who's on a huge team that knows the market, that has feelers all over the place in Western New York.
Yep.
That really helps too, because you really know what's out there. You know what you're competing against, because how many units did your team do last year?
I think we did just under 130.
It's a lot.
Yeah.
It's a real lot. So, having that resource, having that in your back pocket where what the markets and what different areas dictate really helps your clients. And same with us. Like, we're local. Our branch is Western New York. We did 600 units last year. So we know, what's out there. We know what the houses go for, because just in our office, there's months, every month we're closing about 50 loans.
Yeah.
So we know exactly, what's going on.
And you guys have that personal touch too, compared to, maybe a national lender. Every time I call you, you pick up the phone. If I don't hear from you, I get a call back within the first half hour. And you have an amazing team that has support staff too, once we get you under the deal.
So we're a national organization. We're the largest retail lender in the country, but we focus at the branch level here in Western New York. So, all the loan officer assistants that we're working with are, in our office. We're all working together and trying to achieve the same goals. We're sharing information, making sure that we're as being as competitive as possible.
Yeah. I think that's important, especially here in Buffalo, city of good neighbors. You want that kind of family or friend touch that, it's someone I know or someone I know experienced this in the past, whereas, that's a huge thing for referrals.
Yeah, it's Western New York,
It
right?
totally is.
So anything we can do to help out and have our clients win is what we're about. Just like you're always trying to put your clients in the best place possible. And buying a home, it's for us, even though it's something that we do every day, all day long, you have to take a step back and just let people reset it for every client that it is the biggest financial decision of their life, right? I always say to myself, people think about their family's health first, their job second sometimes, you know what I mean? and then like their mortgage. So when they're going to sleep at night, when they're wake, like they're having nightmares, it's about mortgages. You know,
Yeah, it's like
it's
yeah, it's
like
like, am I
it's
gonna
like
be able to get to work to make my paycheck to pay this mortgage to, hopefully, or if you don't have a house yet, to pay that rent payment to save that money to buy a house down the road.
right, the closing costs, the monthly, the monthly payment, everything like gets in there, and get nervous. I mean, even myself, when I was going through the home buying process, waiting for that commitment level, I'm like, I know I'm good. You know what I mean? I've been through the process. Stop what like you still become a client sometimes.
Absolutely. So yeah, being able to kind of step back and walk them through it step by step, and then let them know that we've got this handled because we do this hundreds of times a year, which is great.
Right. So, I think it's really important to every day with every client, you reset that button in your mind, like, hey, we're here to walk you, guide you through the process, help you out, teach you, let you make the informed decision. So your biggest financial obligation, also usually people's biggest asset, that you're fully clear on what's going on.
Yeah, absolutely. And having both, the bank, your loan officer to help you with any of your financial questions, making sure you got the right style loan, your payments, what you want, that you're not going to be in over your head. And then your agent to help you find the perfect place to make sure it's in good shape, all together. It's really important.
So you're a North Towns person.
And you're a South Towns person.
Right. So the two areas of Buffalo that
Yeah. How are we even friends? I don't understand that.
I don't know. But so there's some differences here, right?
Absolutely.
I like snow.
And I don't.
You like it a little bit.
I do. Yeah. It's nice to watch from the inside of my apartment.
Right. And I think, North Town's a little busier. South Town's a little more hilly and a little more laid back, I would say.
Yeah.
But I think they're both great options to live. And then sort of we both converge on the city, which I think is an awesome place to be.
Yeah, we're both downtown for events all the time. We're both in Williamsville for work often, which is kind of like the new downtown almost. Yes, you are in Williamsville. Your office is located there, so you do come to the North Towns for some of your day.
I think the South Towns gets a bad rap.
Why is that?
I think people overplay the snow.
Yeah.
Yeah. And I think people forget, like, we have unbelievable snow removal equipment.
Yes.
So it's not
their first rodeo down there in Orchard Park.
No, or Hamburg, where I grew up in. It's not the end of the world. And that we have great snow removal equipment. And I think, for, houses like what we like, it's a little bit smaller, I think, some of the towns.
Mm-hmm.
I think it's a little more old-fashioned-y. I don't know a better word to describe it.
It's just small town America.
A little more small town America than the South Towns. And I think sometimes that snow wrap keeps some of the North Towners away.
Yeah.
But I love it down there. I mean, I like the ability just to bump around. I mean, it takes me 15 minutes if there's no traffic from my house in Orchard Park to my office on Main Street in Williamsville.
That's not bad at all.
It's not bad.
It takes me 15 minutes to get anywhere from downtown, so it's essentially the same commute.
Right. So the nice thing about Western New York, I think, is zipping around quick and getting to places. Some of the places that, I'm seeing really big demand on, like towns, I'm sure you're seeing it too, is like Cheektowaga.
Yeah. On fire.
Like that.
It's insane.
Right.
I think it's kind of like the perfect location for everybody. Like you said, zipping around town. Cheektowaga, you can be anywhere in 15 minutes. You need to be downtown. You need to be up, towards Niagara Falls. You need to be down in Hamburg. You need to start heading towards Rochester. The access is insane. And the amenities, you got the Walton Galleria, you got Transit Road nearby. You could name any store and it's probably there.
I get so much interest in Cheektowaga. It's wild, and that's where you got to really make sure financially you're buttoned up, because anything priced appropriately is going to get a ton of offers.
Yeah.
And then the other thing I think a ton about is Tonawanda's.
Tonawanda's, yeah.
That's like your guys' go-to.
It's bread and butter. Yeah, I would say 70% of our business is up there in North Tonawanda, town of Tonawanda, and then city of Tonawanda, of course. They don't have the larger lot sizes or the larger homes that Amherst, Cheektowaga may have, but the prices are great and people are flocking over there. Still super affordable and accessible to the Amherst, Cheektowaga area, so you're not very far from everybody else.
I think summer there's awesome. Like it's it's a place I really didn't grow up and spend a lot of time in, but going up by that's the canal or is it the creek
Yep,
there? Like
yep, the
that's
Erie Canal, that's where it
Erie
lets
Canal.
right out to the Niagara River. You've got the waterfront right there. There are some beautiful waterfront properties that I don't think people even know that exist there. There's waterfront restaurants. We got Prescott's Provisions. We got Remington Tavern. And then the city of Tonawanda also was just granted $10 million from the state of New York to revitalize their waterfront. So they're going
Wow.
to do all of downtown. They're going to redo sidewalks, repave. They're going to do all of the walking paths that are along the canal, and then
What's
kinda
that restaurant on the canal? That was I went there.
there's Prescott's Provision, which
Yeah,
is the newer one, and then on the other side there's Dockside and
Dockside.
Remington Tavern.
Awesome.
Dockside, absolutely great atmosphere. You're literally dockside, in the summertime.
I didn't even know a place like that existed.
Yeah,
Like I didn't even know. Like
yeah.
people from the south, there's a place called Dockside. Go there. It's a really cool experience.
I will agree with you on that. Yeah, there's no dockside down in Orchard Park or the
No,
South Towns.
we have ski slopes,
Yes, you are closer to
we're
Holiday Valley for the winter time,
Kissing Bridge.
for you snow lovers.
Yes. So
But summertime, yeah, come up north if you don't want to get on Grand Island. Tonawanda's where it's at.
yeah, I was really I was super surprised. I can't wait for it to warm up and go there this summer. Um, but Tonawanda gets so much on those good houses that are priced right. So many people put offers on them,
Yeah.
right? And just like we talked about, differentiating yourself as a buyer. Like, how do you win this deal? How do you put yourself in the best light possible to make sure you're winning?
Yeah. I mean, town of Tonawanda, especially, city of Tonawanda too, a lot of first time buyers. So I see that kind of revolving cycle of, first time buyers there 5 to 7 years, have your first kid or two, then you need to upsize to the next thing. But, so a lot of first time buyers in the same boat, they're working with maybe between 3 and 5% down, you know, um, we just got to figure out a way to make them stand out, whether it be, they got a closing guarantee that we can add in there, if we need to do our homework beforehand and make sure that we can waive any other contingencies like an inspection or getting you fully written up front so we can have that commitment issued right away. Because, yeah, you're going to be one of the numbers if you're checking out the Tonawandas.
Right, right. I think another thing that I've seen a lot of bigger agents do are like, was it pre-purchase inspections? You know what I mean? Can you tell
Mm-hmm.
me about that? Like,
Yeah, pre-purchase inspection I've seen probably ever since like the boom of 2020 and 2021 here.
yeah,
It's a way to kind of soothe your mind before moving forward on your biggest purchase of your life without having to do your full inspection contingency.
yeah.
There's only a number of inspectors here in town that are offering it. But if they do, it's usually about half cost of it, a full inspection.
Oh, really?
Yeah, they spend, maybe half hour, 45 minutes just doing an informal walkthrough of the property with you. And if there's anything that you're worried about or mostly concerned, maybe the whole house looks perfect, but the roof you're not sure, the boiler looks like maybe it's on its last leg, they'll come in and kind of check out those nitpick items that you're worried about and can give you, not a formal report, but just kind of off the cuff advice, whether you think
Like a heads up, more or
just a
less.
heads up, like this is going to cost you 1,000 or this is going to cost you 10,000.
Because I'll run into a lot. Sometimes everybody wants like somebody's first house, and they don't. They're listening to people, which is important to, get a home inspection. But a lot of times, there's 20 offers on a house, and there's 10 without an inspection, and they're all the same price. And they're going to take the one without the inspection,
Mm-hmm.
right? And it's just like,
Yeah, it's a tough game, and it's tough because you want to make sure you're doing your homework and making sure that property is fully sound before you move forward with this huge financial purchase. But that being said, do you want to get an inspection or do you want to win the house? Because in some cases you can't do both unless you're going to option out one of those pre-offer inspections. That's really the way to get your foot in the door, get your peace of mind, and then be able to put a nice strong offer in without putting in an inspection contingency.
do you know how renovation loans work?
Slightly. They can be a pain, I hear, but
They're a
they're
little-
possible.
Yeah, I mean, so you can do them for purchase or refinances, right? And obviously, you want to talk about purchases. So, if there is a property where there is maintenance required to close, or if there's a property where it's not super competitive and there's some things that need to be made up to date to have you live there. You can do a renovation loan. Now they come in conventional, USDA, VA, what's it, FHA conventional, USDA, VA, right?
Yep.
Renovation loans, right? What they'll do is there's a few different ways to go about it, is you'll give the seller the price they want for the sale of that property. You'll have the contractor, whoever's doing the work for you, can't do it yourself, come out with you, with your agent, and do an estimate and write-up of the work that needs to be completed.
Okay.
And we'll lend on the after value completion of the project.
Cool. Okay.
So, if you have a deal, like I had a deal just recently yesterday, where it was like an oil burning furnace and it's not up to code, right? And they needed a new roof. So my guy already had a quote ready to go. He's like, hey, I'm calling you because you do, this type of renovation loan. I'm like, yeah, we do.
Yeah.
You know what I mean? So
That's a project or a program that I don't think many people know about.
no, it is a little intensive and a little more work, but if you find a piece of property that's, not, that needs that work to get it to where you need it to be, a renovation loan's a great option for somebody to finance that.
Yeah.
And then you have the house you want. you know?
This isn't going to be for that house that 20 people are bidding on, but if it's that house down the street that's been, running a little rough for the last couple of years, but you can scoop it up for a better price and then put in those fixes and make it just as nice, it's going to be totally worth it.
Can we talk about that house on the street that's been sitting there?
Yeah, let's talk about that house.
All right. So there's, I have a lot of, I talk to a lot of people, right? So in a lot of, some people just aren't really that competitive. They're just in a tough spot. They haven't saved a lot of money, or, their credit isn't great, and there's only so many options out there, right?
Mm-hmm.
The house down the street's not a bad option, because here's the crazy thing about our market is if something is slightly overpriced, it sits.
Mm-hmm.
Right. And people view it as like, why is this house sitting there? Must be something majorly wrong. When a lot of times it's not just slightly overpriced in the beginning. And then in people's mind, it gets like that there's something
that's
wrong
the
with
only reason. And if there's a house sitting in Western New York, that's the only reason is that it's sitting, is that it's overpriced.
Correct. So I think a lot of times, like, if you see something that's overpriced, that's been sitting there, and if I have somebody that's like in a challenging position, whether it's assets, credit, income, look at that house that's been sitting there, and then you can really design the financing option rather to meet your needs, whether it's a temporary buy down, whether it's a renovation loan, right? Whether it's seller's concessions to give you the assets you need to close, right? With those houses that sit there that aren't super competitive, like, you can really get yourself a deal.
You can make both people happy too. A seller who has a property that's sitting now has a buyer who hasn't been able to win a property, can come together and they can kind of help each other out.
Right. And I think a lot of times when something does sit in there, then agent on the other side is often happy to make a deal happen. They're like, let's move this property.
Yeah, they're like,
let's get going. But I think that's something that a lot of times gets missed, and, I see stuff out there, I think that's pretty good, and that's just sitting there because they overpriced it by a few $1,000s.
Mm-hmm. Yeah, because Buffalo, we are a hot market. So, things are up for a week, they're gone. And then if it sits for more than a week or 2 weeks and you still see it, you're like, well, I'm not going to look because there must be something wrong with it. But maybe it's just that it was overpriced.
It's usually always overpriced. That's like the answer, right? It was overpriced a little bit.
Just a little bit too high.
Right. It's very rarely it's like something huge structurally. Mostly just overpriced a little bit.
And our price range here in Buffalo is such a small, going into the 200 mark could totally discourage a whole pool of buyers, where if you just drop it down into the 190s, you're opening yourself back up to a whole new pool of buyers.
Correct. There's a lot of people out there. I'll get the call like every week and being like, I had one yesterday, and the person was like, I want to do an FHA mortgage because I don't have enough money down for a conventional mortgage. I was like, well, you're tight on cash. And they're like, yeah, I don't have 20% down to do a conventional mortgage.
Oh, no.
And I was like, oh, that's not the way it works,
Huge myth.
Huge myth.
The biggest myth.
So obviously there's some parameters on anything, right? Like, credit scores, that we have to fall into. But the maximum amount of financing for conventional loan you can do is 3% down, right? For a conventional first time home buyer,
Yep.
right? FHA is 3.5% down. You know, VA, you can do 100% financing if you have your, what's it called? Your entitlement. So you can do 100% financing VA if you have the right entitlement,
Okay.
you know? So there are options, like a lot of options out there. And I think the powers that be, when they made, mortgages, they realize how much housing prices have gone up, you know? So we're trying, I think that, the people that, in charge of everything, banks and Fannie Mae, Freddie Mac, they want to make sure, FHA is Department of HUD, it's, Federal Housing Authority falls under HUD, Housing Urban Development, through the U.S. government. They're in charge of, FHA loans. So they want to they know that, cash for first time home buyers is hard. So they, for conventional, it's 3% down, and, there's different options for sellers concessions. FHA can do 6% on max loan with your max financing. For your conventional loans, you can do 3% down. So there's some options that help people reduce the amount of money. There's also really good first-time homebuyer products out there for people. A lot of the first-time homebuyer products just aren't based on, am I a first-time homebuyer? Yes or no. It's like, am I a first-time homebuyer? Yes. What's your income is the next question.
Mm-hmm.
And then based on the income level you fall into will determine like what kind of money you get.
Gotcha. And then that also can be based off of the zip code that you're looking to buy in and so on and so forth.
Right. There's different grants, different towns. There's a lot of different factors that go in there. There's some home buyers agencies around town that offer loans and grants. City of Buffalo offers a home buyer grant. So there's a lot of different things that go out there. But I think the big thing you want to do is just have that conversation and talk to professionals. And even if you're not ready now to buy a house, like sort of be like, hey, I'm looking at, $200,000 house. I have X amount of dollars. What do I need to be at? And we can run that for somebody. Because you always want to give somebody a path to home ownership, even though it might not be ready like this second, like right now, like they can't do it, but in like 2-3 months or,
Absolutely.
8 months, a year, 2 years. You always want to give them that option that, there's an option for them.
Yeah, I would say it was probably about 2 years ago now. I met with a buyer at an open house. She was super sweet. She loved the house. She had never been to an open house. She had never talked to a realtor or a bank, nothing. So we had a great conversation. Come to find out, this house was way, way out of her price range. She wasn't even anywhere close. But I ended up having her talk with you. We got her approved. Cash on hand was kind of an issue. She was having some familial status issues, a lot of things going on in her personal life. But we ended up finding her house up in North Tonawanda, and you were able to match her with a first-time buyer program that covered a majority of her closing costs. I think she showed up with maybe $4,000 to closing on closing day, and she was buying a $150,000 house that she now is, 2 years into, that she's super happy with.
I think a lot of times I run into people and they're like, well, I felt, dumb asking this question. And I'm like, listen, if I didn't do this for a living, I'd have no idea. There's so many little different things, different variables that control, pricing or cash to close or approval levels, like little things like this that I would never have a clue. So I think when you're talking to a mortgage professional, you want to make sure the person that you're talking with, like they get that they totally understand that you're not versed in their world, because it is really complicated. So I think the biggest thing we can try to do is educate people to the best of our ability to help them understand, because there is a lot of things that are needed, and trying to organize it thoroughly and set it all up for somebody, just to help them with that process about why we're asking for certain things, or, why we ask the certain questions that we do, because, things matter upon like household size and, how your income's derived. Is it salaried? Is it commissioned? Is it bonus? Is it hourly? How many hours a week are they variable hours? Like it all adds into a factor for approval that you want to make sure you get right.
Yeah.
Like that's the biggest thing, because the mortgage professional's always trying to, knock on wood, I always am, is put the client first. I hope everybody's trying to do that, because like that's how you get more business in this world, is treating clients great. But we're always trying to put the client first and ask the questions that, if we don't know the answer, they could throw a wrench in the system that we don't want to happen.
Yeah, we're going to ask the questions up front. We're going to ask for documentation, paperwork, anything that we need to, so that when you do find your house that you want to love and move into, those hiccups don't happen after you're already under contract moving forward, saying, okay, actually, we got to slow down. Maybe we can't buy this house because something that came up that we didn't find.
You know how it's like when you talk like they're like, oh, your teacher or like it's hard on you because they care, or like the coach is hard on you because they care, they think you're great. It's sort of like a mortgage, like in my mortgage professional world. Like if you go to a mortgage professional, they just give you a pre-approval, or an online lender, and they don't ask you any of these questions or ask you to provide the documentation, they don't care.
Yeah.
Like it's a major red flag.
Yeah.
If they just push out pre-approvals without like vetting you, which happens, like that is a major red flag.
Yeah.
Right, that is being lazy.
If it was too easy, it was probably for a reason.
Right. It's like this. It's called the shotgun approach. Right. So it's you push out a bunch of pre-approvals, and whatever sticks on the wall and works and comes back to you.
That's your business.
That's your business, and you don't care about the relationships. You don't care about anything. You're just gonna see what comes back. That's not the way to do business. Right. You got to be thorough. You got to ask the tough questions. You got to ask for the right documentation. You need to explain, your income, how it's derived, any obligations, liabilities that you might have that are unusual, right? You need to make sure that you're fully vetted, because, these are big houses, big bills, big numbers, big assets.
Just be upfront with your loan officer. It doesn't matter if you have, a poor credit history or, a couple things that you're in debt over. We can figure it out. It's just being upfront and presenting that to your loan officer so they can figure out what they need to do in order to get you approved.
So we're talking about like how much money down, like some of the products out there, right? Mm-hmm. So when you talk about equity down, and this is what people need to think big picture, because it's not just about like housing, and it sort of is about housing, but there's also like a wealth component that a lot of people forget. And it's like, your buy versus rent models, right? Do you know what the average amount that a house appreciates on average over time?
How much?
4%.
Okay.
Right? So if you put...
And that's over how long of a period, do you know?
So since I've been tracking, it's been 4% on average, like a straight line. Like some years a little bit down, up, but on average, 4% over time, increase and appreciate, right? So you compound that, right? So if you bought a house and your first time home buyer, put 3.5% down, right? The amount every year, right? It's going to be more if it increases 4% value, right? Let's say it's a $250,000 house, right? The next year, in theory, that $250,000 house is going to increase by $10,000. That's 4% of $250,000, right? And then the year after that, it's going to be a little bit more than 10% at $10,000, and a little bit more. So after 5 years, your $250,000 house is a $300,000 house. So I think that's something that people need to like gauge.
Yeah,
is like that, appreciation that has been historic over time, 4%. That's going to keep on continuing. The earlier you get in the game, the more you're going to get that appreciation.
Yeah, and that's just nationally average too. Buffalo is probably even more than the 4%.
In a short period, it's been more, but over time it's been less. But national historic 4%. And I think like when you're calculating wealth, you can lock in your mortgage now, right? For however many years you
let's
need.
find you that $250,000 house today. Even if your rate's 6%, 6.5%, 7%, if you wait another couple of years for rates to drop, who knows if they're going to, that house is still going to be up to $300,000, and you might be paying a higher mortgage payment and the same rate.
Right, exactly. So I think, one of the things that you look at people, like some of the values of ownership, there's a few things that people like always forget, like that appreciation that we talked about, where it's increasing every year 4%, right? Then also you're going to get an interest tax credit on your tax returns. So you're going to look a little bit more to write off every year. And then, you're going to get that leverage when you do have the appreciation. You're going to have equity that you can do things with. You can get a home equity line of credit. You can pull money from your house if there's a business venture. You need to pay bills, college tuitions.
Put it up as collateral,
Exactly that. I think a lot of people miss the boat on that they don't think about, right? The whole versus rent to own thing and how much more things there are to do.
Yeah, owning somewhere to live, but you're also living in your savings account that you're building.
Right, right. So I think like the wealth component is something that is never talked about around here. I think it's just like people like, oh, just straight up housing, but it's actually usually people's one of their largest investments.
Absolutely. That makes sense.
Yeah.
So, I mean, this isn't probably your typical question in Western New York, probably with a ton of people that are looking to move in for themselves or first time buyers. But if I've got an investor looking to buy, what are their options?
I get a lot of investor stuff. So there's really like two avenues to go down here. The option with the best interest rate is for investment properties for, 1 to 4 unit, residential homes. The best rate option is usually your conventional loans, right? And that's very black and white. That is not closing an LLC. That's not doing a 1031 exchange for those who are familiar with that option, right? It's a black and white, like conventional mortgage. Got to put 25% down on 2 to 4 units, minimum 15% down on a single family house. Now, where it gets fun and a little different is in what we call a non-QM, non-qualified mortgage space, where we can talk about DSCR loans, which stands for debt service coverage ratio loans. And those loans are a little higher priced, but for investors, what they'll do instead of using your total debt obligation to qualify somebody based on your income to debt ratio, they're going to qualify you just on the income of the subject property versus the mortgage payment.
Oh, there we go.
Right. So what's that mean? Is, they have a ratio. A lot of times it's, they want us to be above the mortgage payment to cover the whole.
Yep.
Plus they want to have the rental income cover the whole mortgage payment. Right. There are some scenarios where it can be less, right? Depends on money down, depends on credit scores, things like that. But that is a very complicated area that we really do well in. We have our own products for that, that we securitize, that we sell, that are our own CrossCountry Mortgage products that we have full control over. And I do a ton of business in that space, and we're able to close in an LLC. You're able to do 1031 exchanges. You're able to do mixed use properties with 3 rental units and 1 commercial space. Like, we're really good in that space.
So you guys are flexible on types of
Super
property,
flexible.
on how much you're putting down. Also, well, depending on the space, but
Up to $3 million loan amount. Like, we're really, really good in that space. And then another space, like in the total non-QM space, like bank statement loans, is another place that we're really good at. Do you know how bank statement loans work?
I don't know.
So you're self-employed, right? In theory,
Sure am.
you're self-employed. So a lot of times people that are self-employed will have a lot of write-offs, right? Because they don't want to pay taxes on their business expenses. And we know, how things work out there, right? So what we've done is we've created a product for self-employed people where we're using 12 months of the deposits into their business bank statement to qualify them for a mortgage on an owner-occupied second home or investment property. There's a couple of different ways that we calculate that, but more or less is we do an average of your 12-month deposit and calculate your monthly income. It's really great for home buyers.
Yeah, that makes sense. Yeah, because you need at least the 2 years of proven income, so that helps you out if you're self-employed.
Correct. So that's a really good option that we have. DSCRs that we spoke about, it's a great option that we have. And then we have asset qualifier loans, where if somebody has a large sum of assets and we don't have to prove a work history, we don't have to prove a history receiving, but they have a large chunk of money, we can use that to securitize a mortgage.
Okay, very cool.
Right? If you get divorced, you've never worked, and in your divorce settlement, you get X amount of dollars paid out.
You can use that money.
You can
turn around and buy an investment property for yourself.
Or owner-occupied house.
Owner-occupy if you want to live and have something that generates income too.
And then sometimes, like, we use some of these non-QM products. Like, there's a lot of people out there. It's super complicated. And my past clients, you know who I'm talking about. But there are some really complicated deals out there. And a lot of times, it's just way easier to do the non-QM bank statement loan or asset loan as providing LLCs and K1s
Yeah,
for
if it's
50
gonna simplify
corporations.
the yeah, if it's gonna
Right.
simplify the process, let's just do that
Right.
off of the one bank statement rather than your 50 jobs and 50 incomes.
Right, right. So it's just like, if you own a bunch of different properties, you have a different, like, you go through those conventional loans, they have to ask about everything you own, you know,
Yeah, it's a much more in-depth process that especially an investor may not have the time or need to do.
or
So it's
want,
yeah,
you know what I
exactly.
mean? It's like, please let this go away.
Yeah, like I'll go to somebody else just because it's simpler. So
Exactly. Exactly.
what do you think the best investment type of property in Buffalo would be?
It depends like what your tolerance for risk is. Some people will do like up and coming emerging markets. You know what I mean? It's like some places that need some work to, fix up a place, make it better at a lower price point. Some people will buy something that's already totally done, fully rented. Maybe the crazy upside isn't there for the return, but it's a more consistent rate of return.
Yeah.
It just depends what the buyer is.
Yeah,
You know what I
the
mean?
person, yeah, it's gonna be down to their comfort level and what they're willing to risk for sure.
Right. Like I have some people, they buy a house and they're like, I thought it was going to be this. Our taxes went up. So now we're just going to sell it, and we're going to be out of it quickly. It just depends where people are in their lives. And that's why, we have these in-depth conversations about what are your goals, like how much you want to throw into this, like how fast you want to be out of it. And same with you, you know what I mean? You probably have the same conversations about like how fast things turn over in neighborhoods and how
Yeah.
fast.
Yeah, a buyer that's looking to be there for, if they're looking to rent it out opposed to moving in, opposed to someone that wants to live in that neighborhood because their sister's down the street or so on and so forth. It's a totally different story. So it's really what they want and what their goal is. I might tell someone, yeah, let's go the extra couple hundred, or sorry, extra couple $1,000s on this offer because you don't want to be there for 10, 15 years. Over that time, it's absolutely going to appreciate. Whereas if you're only going to be here 3, 5 years, maybe we'll
Right.
move on to the next.
I'll have clients sometimes it'll be like a father will call me up for a child who's going to medical school or, in that type of scenario, I'll be like, hey, we're only going to be here for 3 years. You know what I mean? I just want to buy this place for my dog,
Yeah, somewhere safe for them to live that has everything working, and then they can sell it for a profit after the
right.
time.
Like that's a conversation that I have way more than people would think. Like people buying homes for the kids because there's a lot of schools. There's Buff State, there's UB, there's Canisius, there's Uville, there's Damon.
It was a very affordable market compared to some other parts of the country. So if they're coming from out of state, a $200,000 mortgage might be the same as a rental payment for somebody, an apartment out of another town.
Right. And then people want to like live in certain parts of the city because it's cool, it's fun, and they say like, hey, I want to live. My kid's going to school at Buff State. We're going to buy a, 3 to 2 unit house in the Elmwood Village area. You know what I mean? Can you, show me that? And then they're going to keep the property after the kid leaves from college, and what do those numbers look like? And I'm sure you get that call a lot.
Mm-hmm. Yeah, they might think they might want it just for a couple of years, but after a couple of years of renting in the Elmwood Village, that's pretty profitable. So they might end up hanging on to it for even longer.
Right. Because I think the cost to enter our market compared to other markets around the country is a little bit lower, cash wise. And I think, the rents that people receive here are still very good compared to some other markets, so the rents are really good. The cost to acquire is more affordable than other markets. So I think it does lead to a lot more people buying property once they're exposed to our market.
Yeah. People who discover Buffalo from other areas, once they find out about the real estate here, they're here to stay for sure.
It's like that whole keep Buffalo a secret thing.
Yeah, keep it a secret.
But use me for your mortgage and Pat for your real estate needs.
Yes. Well, I appreciate you coming out today and talking about the spring market with me and cross country, and I'm looking forward to another killer season together.
I'm really excited. I think this year's gonna be really big. I think I saw some national rankings. I think Zillow had Buffalo rated as a #1 housing market in the country this year. So that's super exciting.
Yeah. So I'm ready. I know you are. So with this little bit of information like this, hopefully our buyers are too.
Let's go.
Sweet.